With the state of the economy around the world, the constant bear market FUD, and many believing that we are just on the precipice of another further decline in the markets, many are wondering, how could this be the bottom for Bitcoin? So this has led to many questions around whether we have seen an accumulation and a breakout, or whether we are just getting started for another redistribution pattern before the market declines further. Today's video is an update of the Wyckoff Schematic. I'm also going to cover some of the areas that I could be wrong in, or at least what I'm seeing in the charts. But of course, I want to go through an update where we are in these phases and also give you a look at where could the next bull market top be, looking at our timing cycles. So regardless of what your beliefs are, whether we're at a low or about to see a further low, you've got a massive video coming up. Like, subscribe, hit that bell notification icon, and if you guys are interested in learning more about trading and how I was able to spot the bottom for 2018, 2019, check out our Investor Accelerator courses. The link is in the top of the video description. There is hours and hours of content to go through. And if you are a Wyckoff fan, we have a Wyckoff Volume Accelerator where we explain in detail what each of the bars mean as we go through it within a Wyckoff schematic, from the tops to the bottoms and everything in between. Now, if you want a discount on that, sign up to our newsletter. Link is in that top of the video description. All right, guys, enough of the shills at the beginning of the video. Let's have a look at where we are with this Wyckoff schematic. I posted this on Twitter a couple of weeks ago now, looking at the schematic itself. There have been some discrepancies, people believing that we are in a different stage to where I'm currently seeing this market. I'm looking at this being phase E, and I want to go through that in detail with you in today's video. But I understand that many are still believing we're probably somewhere around a phase B, with this low being the selling climax, the low that we saw in November. So there is the possibility of being wrong, but I have a bias towards the upside. So take that into consideration as we go through all of the data, and you make your own decision after you've seen what I have to show you. Now, we have news cycles, which is part of the Wyckoff schematic itself. Richard Wyckoff talked about this in how the phases play out. And so I thought it was important just to mention some of the news cycles that we have seen over the last 4, 5, 6 months, because these make up those extreme times in the market. So it's a must to understand how the news cycles work. It is more subjective, and you'll learn how to grow this out with your experience in the market. But essentially what we saw through October and November leading into December, which will all make sense in the Wyckoff schematic, is a FTX collapsed. Then the news media hit all crypto exchanges. You have to remember what happened in history. Binance was getting hit, Crypto.com was getting hit, Qcoin was getting hit. They were all getting targeted by the media. Did any of those ones go down? Simple answer is no. Some people will hang on to that news and believe that it'll happen in time. Maybe it will, but we're trying to make money from the market going up and going down. And if eventually Binance goes down in 5 or 6 years, what have you missed out on in the meantime? Maybe you've missed out on a bull market. So it's important to differentiate the timing aspect of when these things may happen. That's what happens to the doomsday media that continues to spout downside in the market. They miss all the bull markets, eventually getting it right. You know, the old saying, a broken clock is right twice a day. The next stage of that news cycle is that the fear dies out. They've targeted everything they can. Nothing else is budging. Nothing else is cracking and breaking, and so they move on to the next cycle. We saw that with stable coins as well. Stable coins obviously happened before, but if you've been through one cycle now in cryptocurrency, maybe even 2 cycles, you see that the FUD, the fear, the uncertainty, the doubt is always coming at USDT. It didn't collapse again. If this is your first cycle, go and research the previous cycle. They hit USDT in the previous cycle, 2018. Unfortunately, I got caught up in that and decided not to put some of my profits with USDT. I learned from that mistake, and I hope you guys learn from this cycle because they continue to FUD out stablecoins. They hit all of the stablecoins because one broke. They suspect many of the others will break, but they're different. You got decentralized stablecoins and centralized stablecoins. Eventually, that fear dies out. The market moves on, comes up with a new cycle narrative. And that, so far, has been the US banks. The US banks have collapsed. then they go after every single other bank. I've seen a lot of that on Twitter of late. So that's the most recent cycle. This will eventually die out. It is absolutely 100% guaranteed that this particular news cycle will die out. And eventually, you'd probably expect that the markets will finally turn, if they haven't already turned with their stock market bottoms back in October for the S&P and for the NASDAQ, our Aussie market, UK, France. Some of the biggest countries in the world have had their bottoms already. So I just wanted to mention that news cycle because of how severe these things can be at the bottoms, because that is part of the Wyckoff schematic here, looking at the different phases. Richard Wyckoff, Mr. Richard Wyckoff, talks specifically about this in Phase C. It is in Phase C that the stock price goes through a decisive test of remaining supply, allowing the smart money operators to ascertain whether the stock is ready to be marked up. Basically, is it ready to go up? Because all of the supply has been drained from the market, meaning everyone that wants to sell at the most fearful times, are they all out of the market? And that's why it has to work around these extreme news events, because that's the only time you can get the most amount of people, and basically everyone that's ready to sell will sell at those extreme news events. All right, so as noted above, the spring is a price move below the support level of the trading range. So here comes the Wyckoff schematic. Now, the spring, or in another form or another word, is called a shakeout as well. So that's the terminology for that, goes below the trading range. So this is the trading range that I have here on the schematic. So these dotted lines basically make up the different phases. And this is all a work in progress, but you have to have a bit of a roadmap to work with. This side, phase A, then we have a potential phase B over here, then a C, a D, and what I think we are now in is a phase E. And I'll explain more about that as we go through each of the phases here. So I need to go through this so that we can get to the point where, can we be wrong? And also, what do we expect next if we are right? So looking at this, we've got those trading ranges established in phase A and B, quickly reverses and moves back into the trading range. It is an example of a bear trap, because the drop below support appears to signal resumption of the downtrend. It appears to signal the resumption. In reality, though, this marks the beginning of a new uptrend, trapping the late sellers bears, so trapping the late sellers. In Wyckoff's method, a successful test of supply represented by a spring or a shakeout provides a high probability trading opportunity. A low volume spring or a low volume test of a shakeout indicates that the stock is likely to be ready to be moved up, ready to go into a bull market. So this is a good time to initiate at least a partial long position, which is what we've been talking about with our members over at the Investor Accelerator, at least initiating partial long options, opportunities for Bitcoin, whatever else you want to buy up into at those lows, maybe in the stock market, right? But in terms of Bitcoin, that is precisely what I go through in detail here. Accumulation, distribution. This is something that I put together for our members, and we have the Wyckoff program here as well. In terms of what this all looks like as we bring it together with the Wyckoff schematic here, going through each of the phases, breaking this down into as small pieces as possible and showing it on the chart. This is what I've done to justify and support my own beliefs in the market. So I want you to go away and do this yourself if you don't agree with what I'm saying. That's what you have to do. Okay, so Wyckoff's method, successful test of supply represented by a spring, successful test of supply. So we've tested that supply, extreme volume came in on the spring. We did not last under this level for very long. In terms of a Bitcoin or a crypto trader, like these areas seem like an extremely long time. How long is that in terms of weeks? We get to the November breakdown until we break out, basically 9 weeks. You could say to the end of this test here was about 6 to 7. It's really not a long time in the grand scheme of things. However, I understand that the majority of investors will think that's forever. Okay, so that's what we got there. That indicates that the stock is likely ready to be moved up. It's a good time to initiate longs. Okay, so one step back is an example of a bear trap, because the drop below support appears to signal resumption of the downtrend. So the drop below, here is the support. That's the support right there. And now we drop below. It appears to signal the resumption of the downtrend. Here is something that the writer in that article calls a check. So we're whether we get some more supply come into the market. Now we've got a higher low, and then phase D begins with a nice big break on high volume. That's why I'm thinking that we are most likely in a phase E, because we've gone through a phase D and we're not in a phase B at this current point in time. So that then brings us to phase D. If we are correct in our analysis, so there's always a possibility of being wrong, what should follow is a consistent dominance of demand over supply. Consistent dominance of demand. Demand means the chart has to go up over supply. So the supply sides have been very short-lived and not very big at all compared to what we've seen previously. Look at all these moves to the downside here. If I scroll this chart in, we are really in the very small sections of this whole entire area. These downside moves are very small compared to what we've seen on the move down previously in the bear market. So going back to where we are in phase D, this is evidenced by a pattern of advances, SOSs, which is signs of strength on widening price spreads. So these are the things that we have to see in the market. And what I'm going to use is our TIA Gann swing indicator. There's another shill for you guys for a tool that we always use in our trading. Remember, this is what we do full time. So of course we have indicators and tools that we'll use. Check them out. Links are in the description. Very inexpensive to help you identify these things, nice and snappy. Look at these moves to the upside here with our 1 week swing chart. That is bigger than any move that was in the entire schematic so far. So for me, and way I'm interpreting this, it's evidence of a pattern of advances on widening price spreads and increasing volume. Let me check the volume. Bam. Increasing volume compared to this entire period. Of course, this is the shakeout. Those down bars are always going to have extreme volume, but look at where this volume comes in here. It's almost one of the highest volumes in this entire period, except for the shakeout and for this secondary test that I think is a secondary test in phase B, according to what I'm analyzing here, as well as the reactions. So the last points of supply, the supply have to be smaller spreads with diminishing volume. Smaller spreads, there we go. Of course, this one here coincided with the banks collapsing, and then it was an extreme high close. That was the last of the last points of supply, and the backup here with, what is that? That is diminishing volume as the market comes down. Diminishing volume as the market comes down. So looks like phase D has met the rules here. So that's why we are now moving on to phase E. Phase E. In phase E, the stock leaves the trading range. Okay, stock leaves the trading range. If we have identified our trading ranges correctly, then we would have to say that this has left the trading range. Okay, so it looks like we've left our trading range there according to the rules laid out here. Phase E, the stock leaves the trading range. Demand is in full control and the markup is obvious to everyone. Unfortunately, I guess it's not obvious to everyone just yet, but I think if it was obvious to everyone, then we would be pumping even harder. So it has to be obvious to the majority, which is why we've broken through the trading range. Let's not say the majority, but at least those in the know, because of the rules that have been met. Now, of course, I'm still going to get to the point where I think maybe I could be wrong. I'm always happy to go through that. But I'm just going through this piece by piece, painstakingly looking at the rules and the structure of how these phases are formed within an accumulation range. And once we get to a distribution somewhere down the track, we can go through those again. But essentially, looking at phase E now, setbacks such as shakeouts and more typical reactions are usually short-lived. So, I'm not saying that we shoot straight up to $40,000, $50,000, $60,000 Bitcoin. I do expect that we'll have some shakedowns as well. I think it could be stronger than what we anticipate. Something like what's happened in 2019. We had that big move out, and then we had longer, slow grinds to the downside. That's all still possible as well. I'm not saying it has to happen 100% exactly like this, but probably in the early stage, as we break out, we would expect that the typical reactions, so the downside reactions, will be short-lived. So new higher level trading ranges. So essentially, we'll be looking for reaccumulations at higher prices. So we move this chart, look to the upside here somewhere. maybe we start to form another accumulation range, and then eventually, we break out of that range as well. That's what is anticipated within phase E. So this is potentially what happens next. And the reason for that is psychologically is that we start to form bases because we have to get used to the prices again. It's still too fresh in our minds, sub $20,000 Bitcoin. It was only 3 weeks ago that we touched just below 20,000. So psychologically, people have to get used to the new prices. And this is what it says here: new higher levels comprising of both profit taking, so traders will take profits and then look to buy on those reactions, reaccumulation by large operators, and these trading ranges are sometimes called stepping stones. That's what we talk about here as the market climbs out. So you've got a stepping stone here, and then we started to step out again, higher and higher prices. Think about a staircase. You've got the stepping stones on the way up, higher and higher. Doesn't mean that we'll never try and pump high and then set up a redistribution, come back down, test some of these, higher levels, form another accumulation before moving higher again. Those are all possibilities. We'll have to wait and see what happens. But these are probably some of the best entries for Bitcoin based on Wyckoff Accumulation Schematic, if you in fact believe this is where we currently are in the market. So what happens next out of an accumulation area? It's where we've been oversold. We get the markup. Demand is greater than supply. So that's essentially what I think is happening next. This does not mean that we go into a new all-time high. Come on, guys, we've got to be a little bit smarter than that. It's not going to just pump to $60,000. Then we get into a distribution. That could come at 35, maybe it comes at 33,000, maybe it comes at 40,000. And then we get marked back down again because at those areas, maybe the supply comes in a little bit more because what we've seen in the past. You can see that there are some levels here that were support and broke down around 35, and we have multiple other areas there which were previous resistance levels, support and resistance at 35, a big one being the 50% level. So maybe we get a distribution here, and then the market come back down from that point. So we're going to go through this over and over again. Maybe we have another one a little bit lower, and we get a redistribution and a fall back, and we end up putting in a higher low overall. This is all the possibilities, and nothing goes up in a straight line or easy to identify stepping stones, especially while the market is below the old all-time high. Things become much clearer once we break through an all-time high. The trends just continue on much cleaner because of how much emotion is involved in the market and all the new retail investors that come into the market as we break through all-time highs. But while we're underneath these levels, you can see in 2019 and 2020, it can be a difficult period. But the main thing to note is that it's likely that this is the bottoming process like we saw in 2018, 2019. And the same things were being said in late 2019 that we could revisit the $3,000 and $4,000 area, and maybe this was all a mega bear trap. This could have been the biggest bear trap of all time, and we were going to revisit lower prices. But of course, that never happened. Even a worldwide global pandemic could not push the price lower than those previous low levels. We'll continue to update the Wyckoff Accumulation Schematic week by week as these weeks close, because this is what the chart is on right now. If you do want to stay up to date and learn how to implement this for yourself across any other market, again, top of the video description, the Investor Accelerator Premium membership. Check that out. There is hours and hours of content to go through setting up investing and trading plans. There is the Wyckoff Accumulation Accelerator here as well that looks at volume bars. We have the Gann Swing Accelerator as well. And you can also get a discount if you sign up to the newsletter. So go down and do that first and then get your discount to get the membership. All right, so where could we go wrong? I think it's important to visit that, and then why maybe these charts are wrong in themselves. So we got to understand both of these. So like we've just gone through the phases themselves, I think there is a possibility of this particular structure, these schematics, being incorrect because of one, phase A. I think these are labeled incorrectly. I think the selling climax was mostly around June, and this was that secondary test because now we've seen the market break out, which, like we confirmed in phase D and phase E, it's most likely that we have broken out of those areas. But this is the other train of thought where a lot of people are believing that we are only entering phase B, and the top of where we currently are may be the top of the trading range before we start to head back down. Now, that is a possibility. It's not what I'm thinking is going to happen based on what I've talked about here in phase D with the push out on increasing volume and increasing spreads, meaning the move to the upside getting greater than the previous moves. But it's something to keep in mind just in case maybe you think the price is going to go back down, so that you can see where this particular schematic could be wrong and maybe this one is becoming more correct. But for now, I'm pretty certain this one is going to be classed as incorrect, which is why I'm still going with this particular schematic as we're entering phase E. Long-term viewers of the channel know that we've been covering multiple signals and indicators that have allowed us to get a bit of an insight into the market and anticipate the probabilities and likelihoods of that low there in November being the low for Bitcoin. Now, one of those big key indicators are, of course, the time cycles. So looking at those time frames of the days to the downside and days to the upside. That is another key reason why I think that we are in a phase E rather than in a phase B. If we were in a phase B, that would suggest that we would have to go lower again. And if we were to go lower again, this could take some time, maybe a couple more months, maybe into June, another 2 or 3 months from this point. And that would then put the low on Bitcoin very far out from the traditional cycle lows around this 4-year cycle, which typically doesn't happen. It's not impossible, like we know in trading and investing. Nothing is impossible, but the likelihood is less likely that we would then get a low somewhere around June or July and then start to work our way out to a new market top. Like I said, it's not impossible. It's just not the outcome that I think is going to happen based on previous timing cycles, which have worked out relatively well. And we can see we've got that 400 days or so down, 1 year to 400 days to the downside, with about another 1,000 days to the upside, which leads me to the next bull market top. This video has gone on long enough. You guys have got a huge piece of information to go through with the Wyckoff schematic, which is why I think the low's in. But nonetheless, I said at the beginning of the video we would have a look. Where does this next bull market top take us if we project out 1,000 or so days from the current cycle low of November? Remember, if we're wrong and the low comes in June, then we've got to project out again. Maybe some of these timings change. But the timings have been pretty well on point for about 1,000 days, 1,100 days to the upside from the low, about 360 to 400-ish days to the downside, that bear market. So we're sitting at 376 to the downside. If we go out 1,000 days, where is the next bull market top? It's going to be somewhere around September of 2025. Is it a straight line up? Of course not. Will we get some scares with the bears coming back in? Guaranteed, 100%. Look at 2019. You can see in the top here, the bears took control again for many, many months, had another push out, a dump, another push to the upside, and then eventually we got that move out. That is more than likely going to happen. You'll get some nice moves to the downside, the bears will come back in, and then we start to work this market all the way out into that peak. So potentially we'll be looking somewhere around summer to spring for the Northern Hemisphere guys of 2025 to look out for a peak. Maybe we'll get some sort of double peak again where it comes in early and we think the whole entire cycle is over. That's a possibility. Maybe we do get an early peak and a longer bear market, and then we just get a quick final peak, which would mean that the cycle is weakening. We'll talk about that in future videos as this has gone on long enough, looking at the 4-year cycle and what it means to peak early in a 4-year cycle or later in a 4-year cycle. We'll leave that for another video and talk more about the bull market top. But I just wanted to give you that insight at the end of this video. If you stuck around till the end, like and subscribe. Let me know in the comments section about this new bull market top. What do you reckon? Summertime 2025. And your thoughts on the Wyckoff schematic. Are you in this camp of us being in phase E, or are you in the camp of phase B? Let me know your thoughts and comments down below. And if you did want to join us for a TIA premium, get $105 off signing up to the newsletter so you can go through and understand how to apply this to all of your own markets. Plenty of detail there, plus our weekly live streams that we go through all of the market analysis. Thanks again, guys. I'll see you at the next video. Until then, peace out.